This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. Let's take a look at what happened in the auction market over the weekend. Across Australia, there were 1,563 auctions with a clearance rate of 54.6%. In Sydney, there were 515 auctions, clearance rate of 49.7%. Additionally, 1,352 properties were sold by private treaty. In Melbourne, there were 570 auctions with a clearance rate of 64.7%. Another 980 properties were sold privately. In Brisbane, there were 71 auctions with a clearance rate of 45.1%. Additionally, 1,088 homes were sold through private treaty. In Adelaide, there were 58 auctions with a clearance rate of 62.1%. Another 276 properties were sold through private treaty. Lastly, in the capital Canberra, there were 53 auctions with a clearance rate of 73.6%. Another 97 properties were sold privately there. Well, joining me now to talk all things properties, Paul Ryan, Senior Economist with PropTrack, here with me in the studio. Paul, thanks for your time. Auction clearance rates in Melbourne seem to be picking up again. What's your reading into that?
Yeah, it's interesting, isn't it? We saw auction clearance rates slow throughout the year, and now they've plateaued in Sydney at about 50%, and in Melbourne they've been picking up over the past couple of weeks. And I think what that signifies is that sellers are now kind of coming to the table with where buyers are. Borrowing capacity is down sharply off the back of higher interest rates, and I think sellers are now recognising that some sales that were achievable earlier in the year just aren't achievable now, and kind of coming to where the new market is.
And that shift to private treaty as well, is that kind of playing into this whole space too?
I think so. I think we're seeing properties take a little longer to sell, and part of that is because we just weren't seeing, when prices were rising really quickly, it was being quite clear that buyers had better expectations than sellers about where prices should be, and so properties were leaving the market quickly. Now it's a little bit of the opposite.
Looking at the seasonal numbers though, still about more than 2,000 auctions roughly. Is that a pretty high number for this time of year?
Yeah, absolutely. I mean, the first weekend of spring, that's the highest number of auctions we've had in more than 3 years. So yeah, it's a really good start to spring. And we're seeing lots of listings activity from sellers still, despite those interest rate increases.
And what are some of the general themes you're expecting to see over this new spring period?
It's an interesting spring this year. So obviously we're not having the lockdown disruptions that we had the last couple of years, but we're in this situation where we've got lots of sellers. So we're seeing listings activity off the back of those huge equity gains that we've had over the past couple of years. Now, on the other side of things, we're still seeing a lot more buyers in the market than we saw before the pandemic. So we've got lots of sellers and lots of buyers, but prices are falling because interest rates are rising.
And we know the rental market is tight. Is that bringing more investors back into the market who can see a real opportunity here?
Definitely. We've started to see investors coming to the market since the start of this year, and we're getting investor lending is about a third of all lending now, which is about the kind of average we saw over the past few years. During the COVID period, investors pretty much left the market, so it's good to see investors coming back.
Look, we know the RBA meets tomorrow, likely to be a 50 basis point increase. What impact are you expecting that to have on the property market?
We've seen interest rates rise really rapidly over the past few months. Fastest interest rate increases since 1994, and that's going to continue to push prices down. I mean, we've already seen borrowing capacity reduced by about 20% at most for investors. And if interest rates increase another 100 basis points or so, we'll see borrowing capacity down by about 27%. So that puts a huge amount of pressure on budgets for buyers, and that necessarily will flow through into prices throughout this spring and into next year.
Yeah, you just released your property price report last week, but really quickly, in a nutshell, is there anywhere around the country where prices are falling more than elsewhere?
We're seeing a really strong trend where the most expensive regions of the country are seeing the biggest falls. That extends both to Sydney and Melbourne that have seen prices down about 4% and a bit from their peaks earlier in the year, but also some of those lifestyle regions that we saw really huge growth over the past couple of years, places like Byron Bay, places like the Sunshine Coast, and places like Geelong are now starting to see bigger falls than places like Melbourne in general, off the back of, I think, the similar kind of trends that we're seeing in Sydney and Melbourne. So places where mortgages are highest are seeing the biggest pinch from these interest rate increases.
Well, Paul Ryan, Senior Economist at PropTrack, thanks for your time today.
Thanks very much.